Time now for your bond update. Frontier bonds, well, they led high-yield market declines after the company said it wouldn't be holding a question and answer session on its second quarter earnings call, scheduled for August the 6th. Here with what that really means to the market is Lisa Abramowicz.
Thank you so much, Caroline. I thought this was a fascinating story. So Frontier Communications is a telecommunications company that has more than $17 billion of debt. It's one of the biggest issuers in the high-yield bond market. Its bonds plunging to all-time lows today, as it said that it was not going to be holding a Q&A session with analysts and reporters on its August 6th earnings call. This comes after discussions with some of the investors who invest in its debt. I'm talking about Elliott Management, Apollo, Franklin, and Capital Group, among those that do own a significant portion of these bonds. Meanwhile, you've got credit default swaps already pricing in a 90% chance of default within 5 years. Right now, though, the implied yield on these bonds is upwards of 28% in some cases. So it would be very expensive for this company to roll over some of its debt, including the $2.7 billion of debt coming due in 2022. Okay, so taking a step back, why do we care so much? First of all, it's an interesting story, but second of all, it highlights two very important realities in today's high-yield debt market. Number one, a lot of companies are not getting free money. In fact, the borrowing costs are increasing dramatically if they're not showing investors that they can actually repay their debt. You can see this with the CCC rated bonds. They are yielding substantially more than the rest of the overall high-yield bond market. This is spreads on CCCs over the broader high-yield bond market. It's at the highest level going back since earlier this year. It also shows, again, that even though money conditions are easy, investors are showing some discretion. So Frontier is sort of an interesting bond of the day, but also emblematic of today's high-yield bond market.